This conference will now be recorded.
Good evening, ladies and gentlemen. It's Clueless Day Trading Frank. It's approximately 9:07 p.m. on November 19th, 2020. Welcome. This is our midweek strategic webinars. I did the last one on Monday, so I spaced it out to do it for today. Normally, we have it on Sunday nights and Wednesday evenings. So, again, welcome. Thank you for attending. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we shall begin. As we always do, we try to attempt to analyze the markets, do some predictive forecasts, look at some stocks, entertain some questions from members, member Q&A, and try to make sense of what the hell goes on with the US financial markets, and specifically stocks, and more importantly, options, which are risky business. We all know that, right? We know that big time. So, say risky business, but risk versus rewards. If you do it methodically in a certain way, you'll have some losses, and then you're going to have some very powerful gains. And that's the reason why I'm still alive financially and still doing well. So that's the way it goes. So all of you have to realize that options are not a walk in the park or getting a nice ice cream of your favorite flavor. It's tough stuff. All right, tough stuff. So there's a lot of things that goes on. So saying all that, let's begin. What you're seeing behind you, as I always start, is the actual E-mini futures on the Globex markets, on the international markets. China markets have opened right now. Australian markets obviously open a lot earlier. And E-mini futures are down 26 handles. That's why you see this red candle right there. This is where the market's closed. Sorry, this is where the market's closed, and we have a nice red block, and then a couple of little red candles, which look like it might break down a little bit further. So futures are down 26 points. Dow Jones, that's E-mini futures, that's S&P futures. Dow Jones futures are down 237 points. NASDAQ futures are down 20 points, not a big deal. Can anyone tell me why, aside from Paul? Because this is a very important fact that I'm going to talk about tonight.
Mnuchin wants his money back, I guess.
Yeah.
You say you don't want to fund him?
Yeah, except it's not his money, it's the Federal Reserve's money. Yeah, exactly. You're dead right. So what happened right after the markets closed? It's not a big deal, but it's somewhat of a big deal that as a tactical trader, I have to always share with my members and be careful about, is that the Treasury Department is looking to extend the handful of the Federal Reserve programs, but also cancel a lot of the small business funding programs that are due to expire on December 31st. Okay? So bottom line is they sent a letter, Mnuchin, who I respect a lot, you are Treasury Secretary Steve Mnuchin, very smart gentleman, ex-Goldman Sachs partner. It says that he basically says that at this point that the Federal Reserve that he wants the money back. Like, who said that? Ed?
No, it's me, Frank. Chris.
Oh, Chris. Yeah, Chris. You're right there on the ball. So, so the Federal Reserve would prefer. So they basically want some of the assistance programs that we have given to small businesses, and the Federal Reserve allowed the Federal Reserve to buy corporate bonds. In other words, the support mechanism that has lifted the markets to this degree from March 23rd. Okay, so they want a bunch of those programs to be stopped by December 31st. But here's the point: the Federal Reserve immediately, and I'm a big student of understanding the dynamics of how not just U.S. politics, but how the Federal Reserve works and how our economic system works. The Federal Reserve immediately, within 5 minutes, this is important. This is really important. It's like you getting sued, and then you respond back to that bullshit, lawsuit, and within 5 minutes, the judge, the court says, all right, you're going to be fine. So the Federal Reserve within 5 minutes says the Federal Reserve would prefer that the full suite of emergency facilities, which are the lending programs to support U.S. businesses and such, established during the coronavirus pandemic, I'm reading off my iPhone, continue to serve their important role as a backstop, i.e. support for our still strained and vulnerable economy, the Fed said in a statement. Within 5 minutes, it responded back. So what's happening, think about it in a common sense, is the Trump administration, I don't know, I mean, I'm not going to get into the politics of this thing, okay, it's too heated, is basically saying, hey, if we're going to exit the door, and if Biden's going to take over, then I'm going to stop these programs and everything that we kind of pushed through, which the Trump administration certainly did, with the help of Federal Reserve and Chairman Powell, who's an amazing gentleman. So what does that do? You take away the liquidity away from the business lending part, from buying corporate bonds and such. What do you think happens to the market? Somebody else other than Chris, please. Think. This is simple stuff. Exactly. It goes down because the market is nothing. It's a swamp of liquidity, money. So if you drain the liquidity, then there's not enough loose cash to buy the great companies in America. I mean, they don't buy the Federal Reserve, don't buy the companies. I mean, they should actually, if you ask me. But the corporate bonds and the lending facilities, a lot of small businesses go out of business. So it's kind of a punitive action by one political party to another. Okay? So Donald might be thinking, hey, F you get into office, then I'm going to screw you in a small way. Well, let's see what happens, because the markets are a lot smarter than this. They might have expected this. So that's the reason why futures are down 26 points and NASDAQ futures are down 22, which is actually nothing.
Hey, Frank.
Yeah. 1 second, don't interrupt. And hold on, let me just finish my thought. Then and then the Dow Jones is down 243 points. Go ahead, Paul.
Yeah, just on the fact that NASDAQ's not as affected, is that because they're financially stronger?
Absolutely. The NASDAQ, they're financially stronger. They are growth companies, and generally speaking, they're not as debt laden as many other companies, like the airlines and such. But they will also be affected. No question about that. So saying all that, let's get in the bigger picture. We have had phenomenal winners across the board. All right. We have had, because I just don't stay with the big cap techs, as you all know. I like to mix that up with the small cap monster winners like Blink, like GameStop, which is going to go a lot higher, by the way, because it's a restructuring M&A play, mergers and acquisitions. There are 3 heavy-duty billionaires that I've talked about for months in the company wanting to shut down all those GameStop, close down a significant amount of, and as I'm talking, I'm just going to switch around the charts so you're not looking at the same old screen. Shut down a significant amount of real estate, all these GameStop stores on every corner in most cities, and make the company more of a digital company so they could be up 800% from here. Why do billionaires get into activist investor mode? Can somebody tell me? What is an activist investor? Dark horse. What is an activist investor? I don't have all night, so when you get into my webinars, you're going to answer quickly. What is an activist investor when they get into a company and say, I'm going to take a seat on the board?
I'm not sure, actually.
Okay, fine. Heisenberg, what's an activist investor?
It's someone that wants to make changes that
Exactly. That's all you got to say.
going on.
And somebody, like we say in the world of financial, in the financial world, somebody wants to unlock the value of the company. And there have been many, many cases of that. So every single time that you get big shot guys taking in stakes of 2 billion, 3 billion. Let me give you a small example. If Warren Buffett gets into a company and says, listen, I want to restructure that company, that stock goes up 30%, 20%, 15% within minutes, within hours, within a day, because they're going to do financial reengineering. They're going to break up the value. They're going to look to see where the inefficiencies are, who to fire, who to keep. And that's what the sharks do, which is the greatest thing ever. A lot of labor unions and everything complain, oh my God, I got fired, this and that. Doesn't matter, because the bottom line is you want to make the company more efficient. We are not a socialist country. We are a thoroughly capitalist country. And more importantly, there are actually countries like China, believe it or not, who are far more capitalist than us, believe it or not. Okay? So that's exactly right. Thank you, Heisenberg. So they want to unlock the value in GameStop, and that stock was a $90 to $100 stock 2 years ago. Will it go back to 100? I don't think so. Will it go back to 20, 30? I'll take it any day. We're already taking it all the way from $6, $7, $8 to almost $13. One step at a time. Exactly. So what's the big deal? So anytime you see, when you read, anytime you see anywhere on a particular company that a certain hedge fund or a certain money manager or a certain company has come in, a certain activist investor has come in and decided to take a stake, you know that they're not there to lose money. Okay? They're not stupid little pikers like us. Those guys, if they're going to put 2 billion, they want 4, 5, 6, 10 billion out of that. Exactly. Yes, it might take a little bit of time. They have patience, of course. Restructuring takes time. It's very bullish, if you ask me. Very, very bullish. And then on top of that, they're in the gaming industry. What more could you ask for? And on top of that, they are, which I've talked about before and posted the news. They just signed in with Microsoft's internal tech stuff, where they can manage their online sales and all that stuff. A lot of good stuff, guys. All right, so think outside the box. Here's my point that I want to make on the broader scale before we get into the charts and stuff, is stop looking at the same old stuff all the time. Stop looking at Apple, Facebook, Amazon, Google, Twitter, even Tesla. Okay? Stop looking at the same stuff all the time. I'm not saying those are great companies. And you can have your bias, whatever. You might think that Tesla, which I've shown on my previous webinar, Tesla can go to $1,000. But why not spread and diversify a little bit on these massive winners like DraftKings, like even Carnival Cruise Lines that we traded for a couple of days this week and last week, CrowdStrike, Fetch, FTCH, giving you names that I put out there, UAL at certain times, and other airlines, Boeing, that I've been telling you guys to buy from 140, 150, 160, 170, 180. The stock hit 225, exactly where I said it was going to go. I'm going to show you the chart today. Why not spread out a little bit? Why keep on looking at the same stuff that every trader is looking at? Why not look at Twilio? Why not look at Shopify, monster winner? Why not look at Carvana? Why always look at Alibaba and all and the same old names over and over again? Why not look at Trade Desk, which I missed, by the way, this week, because I was looking at it. They were up 300%. Trade Desk, TTD. Can somebody tell me what TTD does? If you don't know, like whatever, take a guess. What does Trade Desk do? Oh, here's the hint. They don't trade stocks, all right? What does Trade Desk do? We have traded that monster before, and I'll be trading it again more. What does Trade Desk do?
It's like digital ads, right?
Yes, exactly, exactly. Who's that? Who said that?
Heisenberg.
There you go. Heisenberg, you reading some bedtime reading or what, man? All right.
Almost.
Exactly. Yeah, I know. Online digital ads. They are the ones that power Google's AdSense. And no one knows about it. No one talks about it. TTD. Stock was up $32 today after being up, holy cow, it was up 50 at one point, from 772 to 823. Okay, I missed that. So what? Gave you guys Shopify. Shopify is a $1,000 stock. Of course it's a $1,000 stock because it's already there. Shopify is a $2,000 stock. We bought Shopify, which we'll look at in a few minutes, before any news. I had no idea what the news was. I looked at the chart and I said, you know what? This is looking pretty cheap. And the stock was down $34 that day. Can somebody tell me? And I found the news out the day after. The stock was up 25 points and it jumped another 30 points. Can somebody tell me why Shopify went up like that? Just curious. And the point that I'm making is just on your phone or on your laptop or your iPad, whatever you look at. Okay.
Didn't they get an upgrade?
Yeah, the upgrade was one, but before the upgrade, there was another story. So what I'm trying to impress upon all of you guys is when you're in a stock or you're looking to get in one and you see that I'm putting a post, just go in there. It takes literally half a second and look at the news. Okay? You would look at the news on MarketWatch, look at the news on an iPhone, on TD Ameritrade, whatever. You have the news source. And to this point, and this is the part that I love the best, I'm just constructing a chart of the market. This is a brand new one that I'll be showcasing tomorrow as I'm talking to you. Is not on TD Ameritrade yet, on my Thinkorswim platform. I found it as I Googled it. I said, why is Shopify up? You can just Google it like simple, like, hey, why is Shopify up? So I found the Canadian website. Shopify signed with Alipay. Do you know what Alipay is? I know Paul knows, but somebody else, please. What is Alipay? What is Ali? You know, play some word games. What does Ali sound? You know, what does it sound like?
Alibaba.
Exactly. Alipay is the largest transaction system in the universe. Okay, it's like it's the payment systems. Your PayPal are dwarfed by Alipay. Alipay has like, I don't know, like 60, 70, 100 plus million customers. And Shopify just signed with Alipay so that Shopify's customers, which are worldwide, and you know, Shopify is a Canadian company. It's Canada's Amazon, by the way, just so some of you didn't know. Is now has access, so they give all their merchants access to use that transaction system and reach every corner of the world. No wonder the stock went up like that. But I didn't know that. I looked at the chart. Then the news came. Those are the best trades ever. And the stock will go a lot higher. A lot higher. I'm telling you right now. Okay? $2,000? Yep, I think so. So that's it. So saying all that, let's go through barrage through a couple of charts and see what's going on. So this thing that I just told you about what Mnuchin and the letter he sent the Federal Reserve and the Federal Reserve immediately responded back is actually pretty serious business. Because markets can fall quite a bit on this short term. So this is the chart that we follow. We have the gap fills with the red dotted lines. So if we fall down to 3,500 again, then we're losing another 500 points on the Dow. Can that happen tomorrow? I don't really think so because there's a lot of options expiration going on and stuff, but it can certainly happen on Monday or Tuesday. Just letting you guys know if this thing pushes through. Because last thing you need is the Treasury Secretary of any administration, Democratic or Republican, fighting the Fed. And the Fed, it will stand strong. So it's politics versus brains. And the brains are the Federal Reserve. There you go. So keep on watching this chart for your intraday trades. You know, this is a 1 hour chart and we are resetting. I wouldn't be surprised, which I've been dead right almost 80% of the time where we open up. If this continues, then we will open down 40 handles on the SPX, which means that most large stocks will be down. Most stocks will be down. Will be down. Nothing crazy, but they'll be down. So these are the levels that I'm watching. And these levels you guys should watch. Next. Here's your daily. Now the daily chart was looking fine. It had a nice green block. I posted that on my Twitter feed, which I know you guys look at. It looked like this. Let me just pull it in. Bear with me. Sorry. It looked like this when I posted it. Where is it? Right here. Right here. Right here. Remember, we're visual technical traders. We're not in this business of giving you long-winded stories, all right? So get used to the charts, ladies and gentlemen. So this is what the chart looked like. Looked amazing. Amazing. That was what, around 330 maybe? 335? Nice, beautiful candle in the middle of the acceleration channel. It doesn't need any explanations. Everything looked good. And then what happened? Nothing really bad happened. But then this happened. That green candle disappeared. And now we're here with futures down 25 points. So the next backstop or support is 35.10. So if we drop from 35.56 to 35.10, we're losing 50 handles on the S&P. Now I keep on stressing these points because many of you, despite the fact that you claim that, despite the fact that you guys are think that you are technical traders, you're emotionally defunct. Okay? Because when you see the markets down 500 points, you just freak out. One of the reasons we have so many people here today is because the markets are doing well. I had 3 people on my webinars when the markets are down 1,000 points, and those are the times to buy. Exactly. So please look at yourself in the mirror before you go to bed and tell yourself, do you want to buy when it's really ugly? Or do you want to buy when things are looking pretty good and you made some money on Square, you made some money on Shopify, blah, blah, blah. Exactly. You have to do the opposite. The days that you don't want to get out of bed because if you're full-time trader or if you or if you're a part-time trader, no, I don't want to look at the screen, is the days you want to buy. So right now, there's a little bit of froth in the market. And that's what I'm trying to show you. And I'm glad that all of you are here. And I deliver the same content, whether there's 3 people here or 2 people here or 1. Okay, exactly. So from here to here, we are looking at, we're looking at least 400 to 500 points. All right. So get ready for that. That's all. The charts are clear. This is what might happen based on this development that happened at 4:01 p.m. today. This is a bull flag, which was a nice green candle in here, which I just showed you on the last chart. That means we would have busted a move like that. Instead, we're down here now. So we come down, we retest this breakout level, which is right here, right around here. Or we come down and retest this very important support because 3 times we held this, which is around the 3,500 level on the S&P 500. And then we bounce. If we don't, you get reduce your long positions and short the market. Not go on a, oh, I love you, I'm going to marry you forever kind of short, just short for the day. Because there's still a lot of juice left in the market, not just in the amount of capital, 4 trillion, almost, I think it's 4.5 trillion right now still on the side, but the longer term charts are still good. So that's what I'm warning you guys. This red line is the 50-day moving average. And it's possible that if we get into a real spat with the Fed and it reaches, you know, it's amplified on the media, there's going to be a lot of panic. So it doesn't matter what great company fundamentals or whatever, they're all going to drop. So please be ready. That's called predictive analytics. This red line here is the 50-day moving average. We are quite overextended, even though technicals look great and everything. We are quite overextended. Why? Something that I've mentioned about 2,000 times. The red line is the 50-day moving average. We have moved quite a bit away from the 50-day moving average. What's that technical term called? Somebody. When you move away from the moving averages.
A divergence?
No.
No.
It is divergent, but that's not the term that I'm looking for. It's not a divergence, actually, wrong. Somebody else, please. Come on, aside from Paul.
Standard deviation.
Thank you very much. Thank you very much. Who said that?
Zach.
Hey, Zach. Exactly, standard deviation. You have deviated a lot more away from the moving highways. Just the way we had deviated quite a bit here. This standard deviation was probably around 3. This standard deviation is actually quite a bit. So obviously the markets are overbought. When you move away from the rolling highways, imagine driving your fancy car or your not fancy car, whatever, and you deviate too much away from the highway, well, guess what? You want to get back on the highway. That is correct. The standard deviation is quite a bit. So there is going to be a higher propensity or bias to move back towards the average. That's why I think the markets are going to fall. And this particular event that happened at past 4 p.m. is, in my opinion, not a disaster, but it's not good. It doesn't help the markets. The markets don't want and hopefully Donald doesn't start tweeting. He's been very quiet lately. You noticed? He's been very quiet. Did Melania take his phone away or what? I gotta call her. She's so hot. Oh, I'm sorry. So anyway, so bottom line is, yeah. So when Donald starts pissing on the Fed, expects the market to go down. Okay? So it's not that big a deal yet, but it's there, and I just want to warn you guys. So yes, the standard deviation is quite a bit. Now, aside from that, we are also, this was actually looking really nice. It was looking like sideways to slightly higher on the previous chart that I showed you. Now it is buckling down. If it crosses down, reduce your positions, get some shorts. Of course, there'll be of course there'll be stocks that are going to go the other way. Okay, whether it's Blink or Sonos or GameStop. I mean, what do they really care about Fed facilities? But stocks like United Airlines and then other bank stocks and stuff will all get hit. That'll pull the overall broader market down, and tech stocks too. No question about it. Don't fool yourself. Okay, this is not a fairy tale land. So, saying all that, just get careful. I didn't expect that statement to come through. So when I saw that, I'm like, oh, it's not good. Not that bad, but not good. So that's where we are on a short-term basis. Now, if this crosses down, again, simple common sense. That means the markets are coming down. Next, Let's look at it slightly longer term. This is your this is the one that I showed on the Qs. Now the the Nasdaq 100 tech charts, aside from certain tech stocks that we've been playing, or ones, some of the ones we have missed, like Trade Desk and ServiceNow, things like that. Shop we didn't miss. Workday we didn't miss. And that's another thing I'm going to talk about, because one of my members asked me, like, how do you play these things? Is it always options? Well, a lot of times I say buy common and options. So you can sell the common after hours. The stock was up like 14 points. So even if you buy 10 shares or 20 shares or 50 shares, or 100 shares, doesn't matter. I don't know what your capital risk and capital is, options capital is. You just made yourself a couple of hundred, if not $1,000, $2,000 after hours. That's the way you do it. Williams Sonoma, not a tech stock, high-end retailer, high-end furniture retailer, right? Williams Sonoma, absolutely amazing stores. I'm sure you guys have been in it. Still up $8 after hours. Which I told you guys to buy today. So, but the overall techs have been doing nothing other than Tesla, just going nuts. So when I look at this chart here, and this is the actual Q, so it's not a real-time futures, right? This is not the NQ. This is the actual ETF. I would like to think, as somebody who's bullish, that this is a complex inverse head and shoulder. That's what I'd like to think. And every single one of these dotted lines are gap fills. But if you noticed, Apple has done nothing over the last couple of days. Nothing. So as long as these gap fills hold, at least this one, which is the 288 mark, and I know Chris follows the SPYs very closely. As long as you hold this gap fill in the range of 288, then we should be good to go. And this was looking fantastic today. It looked like it was going to break out. But given the state of the futures right now, and Mnuchin, pissing on Powell, and Powell returning back with the statement within 5 minutes, it's, obviously this is not going to look like this. Tomorrow it's probably going to look like this a little bit. Or maybe not. So that's your QQQ chart. It's a little complex. It's not as clean as we would like it to be in the world of technical analysis, but so far so good. That's where we are. That's your 1 hour chart on the actual NASDAQ 100. As long as we don't break all the way down, we are good to go. So 288 is the mark that I'm looking at, and see how the market reacts at that point on the QQQ. Let's take a look at what the VIX is doing. Oops, I gotta pull up another screen. Okay. So the VIX, I said today, as you all remember, because I'm sure you guys do, because you guys focus on the real-time Twitter feed like big time, don't you? Exactly, you should. If you want to survive in this business, in the business of options trading at least, all right? This is where what the QQQs look like. So this looked like a bear flag. It certainly is a bear flag. This is what a bear flag looks like. 1 second. Right? That's what a bull flag looks like. So this is what a bear flag looks like. However, the thing I wrote down on my Twitter feed, very simple. We're in a bottoming process. Of course we're in a bottoming process. And lo and behold, there has to be a news event which is somewhat negative to the markets, as in the Mnuchin letter to Powell and the Powell return letter back. Funny how these things happen, right? So now this is turning. If this starts turning, which is the S stock, I mentioned this about 900 million times, it's going to be a fast move down till it gets overbought. This is the short. This is your short F stock. This is called predictive analysis. You don't get that from many places. They always say trade what you see, which is a heap of garbage, by the way. You always got to have some predictive analysis, when you're looking at the markets. So if this is the fast stock, so this one, if we're down 400 points tomorrow, this will be overbought. That means the markets will hit here. There's your uptrend line, and then, the VIX will hit here somewhere around 26, 28. Everyone's going to freak out, and right there, the VIX has failed 2 times, and I wouldn't be surprised if it failed again. And that would be a great buying point for equities. If somebody wants to buy some VIX calls into the 28 range, go ahead and do it. Or VXX calls, sure, you can do it. They don't really produce as much ROI percentages as I like, but they move. When the VIX goes like this, that's when they really deliver some big bucks. But generally on smaller moves, they don't really pay that much, just so you guys know. The elasticity or the gamma and the alpha and the delta on the VIX calls are not that good. Just letting you guys know. So yeah, so this is turning, and if this starts to cross over, then net short-term rallies will be sold. Now that is also possible as we get into December, because there's a lot of tax loss selling and all kinds of harvesting and all those programs, right? You guys understand that, right? In December, there's a lot of tax loss selling and stuff. Heisenberg should know that, right? Lots of tax, tax stuff that goes on in December, especially for stock investors. So just warning you guys, the VIX is this is the VIX daily. If we break out of this looks like a bear flag, but it's also kind of a falling wedge. So this is a high. There's a good probability by tomorrow we might get a spike on the VIX. Markets are very strong, so I am not, I'm not going to turn short-term bullish. I'm just showing you that if these technicals cross, this has already crossed, then you're going to get a sharp pullback. It's not the end of the world. Okay, next move. 1 second. Any questions while I'm going through these charts?
No.
Okay. 1 second. Let me move this one back to my other screen. It's like these charts are like little tiger cubs. You go to the zoo, they bring you out to show you, then they take it back to that small cage. So I got to move these screens back to my these charts back to those other screens, so I don't get lost. Okay. We are going to look at a longer term chart. So let me see. Not this one. Is it this one? No, but we'll pull it up. This is a I already showed you the daily. This is your weekly. Okay. Oh boy, this I'm actually seeing it after 4 p.m. and this is basically telling me we're going down. Exactly, we're going down. Nothing crazy. And if when I say going down, I can be dead wrong, but that's an inverted hammer, and it's coming off pretty much around the same level where we hit. It wasn't past Monday, the Monday before, when we hit 36.66. So we hit the upper Bollinger. Look at that, the ribbon, upper Bollinger, boom, we're coming down. So if this engulfs this candle and comes down, that's when we get those 500, 600 point type of drops. This is the part that is still a question mark. Are we going to, and I'm just preparing you guys so what might come, so just so you know. Is it going to cross down? Is it going to cross down? Or is it going to simply kind of like move sideways, wiggle up, and then move up? Because it's certainly not fully overbought. the weekly chart is not fully overbought. In other words, there is room to move higher. So if it starts to cross down, then you know what to do. Buy some SPY puts, buy some QQQ puts, you know, buy some VXX or VIX calls. Do whatever, you know, instrument that you know that will make you money on the downside. Short some stocks. Short it, you know. I'll short, remember, just because you're long a stock you made money doesn't mean you can short that. I'll short, what you call, Shopify any day. I'll be very scared about doing it, but if I see a total breakdown, sure. You can short any one of them. You can short Tesla for hundreds and thousands of dollars, but you got to be very quick because those are very powerful stocks. So just letting you know, this is it's still a bull trend. The body of this candle is still within the body of the previous week, so we're still okay. But again, 3,500 is the mark that we're looking at. 3,500, just a round figure, 3,500. We break 3,500, it's going to be a rapid fall towards the blue line here, which is the mid Bollinger, and that means this is going to come all the way down here. Possibly an inverse head and shoulder, possibly the market bounces from here again. Okay, what's the date? What's Thanksgiving date? I always, you know, forget.
26.
26, right?
Yeah, I think so.
Yeah, we're like such idiots, right? We don't even know Thanksgiving date. I never 26 guys. Can somebody check and tell me? That's next Friday.
Yeah, it's the 26th.
Okay, so that's next Friday, right? I mean next Thursday. Of course it's Thursday.
7
So
days plus days.
there you go. So one of the things you don't do ever, in my opinion, I mean I've seen this happen over years and years. You don't short Thanksgiving. You don't short any major holiday, religious or national holiday. Okay, just don't do it. So even though we might get this little shenanigans, it'll happen very quickly, and you basically get a rally into Thanksgiving, which nowadays with moving things moving so fast, it could start on Wednesday and end on Thursday, whatever the case may be. I still think that month end ends well. That's my opinion. But some turbulence over the next 3 to 4 days, trading days, just so you all know. But the markets are very strong, so I wouldn't. I could actually see it come down a little bit with futures down 24 right now, maybe a little bit more, and then bounce again. Okay, next, let's take a look at, and this is a really, really important chart. Let me change this one. It's already starting to bounce here a little bit. Which is the monthly chart. And this all depends on how the presidential transition goes, whether we get another stimulus program, whether or not the Fed decides. I mean, and Mnuchin doesn't, you know, he's a very smart guy. I don't think he wants to start a full-fledged war with Chairman Powell. I hope he doesn't. So, because Powell's really a quiet guy, he'll just basically stay quiet, but markets wouldn't like it. So saying all that, this all depends on this. This is a very powerful bullish chart. Ladies and gentlemen, this goes back to when we were all 13 years younger. Okay, this goes back to 2007. This was the Great Depression, the housing market crash, the CDOs, the CMOs, the Big Short, all the garbage that happened. Okay. And that's 2009, the bottom. So when you look at this chart, there's actually nothing bullish, bearish about it. This is a monthly chart, so each candle is a monthly candle, and a lot of funky stuff happens every single 15 minutes, 1 hour every day, so the monthly candle is masking it. It's a very bullish candle, but in between, there's been a lot of 600, 1,000 point down days. Yes or no? You guys understand what I'm talking about? Do you guys understand the concept of what I'm just talking about?
Yes.
Exactly. So as a trader, you might think that it's the end of the world just the way some of you thought 2 weeks ago or a week ago. And there were 2 people on the webinar. Okay? And nobody wants to touch the market. All that is masked within this very bullish engulfing monthly candle. That's the month of November, ladies and gentlemen. So there is nothing wrong from a technical standpoint, but you can't make money trading a bullish candle on a monthly basis. Do you guys understand that concept? Because it's a very important concept, specifically for options traders. And somebody step up and say, no, I don't really understand what you just said. Everyone understands what I just said? That this bullish monthly candle is not going to make you money as an options trader.
What do you mean? Like if you bought a month out?
No. What I'm saying is, listen to what I just said a few minutes ago. The one bullish engulfing monthly candle has so many 1,600 point down days and 800 point down up days, and I mean not 800 point up days, 400 point
Gotcha.
up days. So as an options traders, you are in a very turbulent wave. And that's the reason that most of you, a lot of you, or some of you, just give up at certain times. Like some members gave up. Feel sorry for them, but hey, you know, hey. And it's all within this green bullish candle. So as an options trader is looking to make money every couple of days or almost every day or every couple of days or every week, like, oh, I want to be up every week. Even though it's going to reach its predetermined destination, you get completely lost and you lose money because you're not managing your positions right. And that's what I'm saying is one bullish monthly candle. As an options trader, you got to look at the shorter term picture and keep an eye on the longer term picture. Do you guys understand what I just said? Because this is a really goddamn important concept for all of you, ladies and gentlemen. And this is the one that's the most frustrating part. Almost 80% of things that I've told people to buy on a swing trade months and months ago, weeks and weeks ago, days and days ago have worked out. Yet 90% of you are not in them. Yes or no? Yes or no?
True.
Come on, just say it, guys. Yes or no?
Not on all trades, though.
Well, most trades you haven't been, Heisenberg. Please. Otherwise, you'd be up $1 million for the month. Exactly. Because we all, from a behavioral dynamic standpoint, and I also get swept up in that once in a while. Okay? And I always try to fix my head. Is we all want that 80% return overnight. Yes or no?
Yes.
Exactly. And that's called recency bias. Like what is happening right now will happen tomorrow. No, it doesn't work like that. So as long as all of us, that includes me, identify our mental faults and use these amazing technical charts, you're going to make a lot of money. But don't fool yourself by saying, oh, I was not all. No. Because when I told people to buy Blink at 7, and I will showcase that stock. Of course I will, because I was the one who talked about it weeks ago, months ago. I said, this is a swing trade. The company will most probably get bought out, and they probably will. And the stock is hitting $22, $24, up 300% just in the stock. Forget the options. Somebody
Awesome.
please stand up, and somebody please stand up and tell me. And I'm guilty too, because I didn't hold my whole position. I have some long-term stock in a non-trading account. And I'm going to hold that. So somebody please tell me, honestly, look at yourself in the mirror, not some fake BS conspiracy garbage, and tell me that you made 2,000% on those options in the past 2 weeks. The answer is no. The answer is no.
I did own the stock though, but exited way too early.
Okay, so that's what I'm talking about. It's the fact that if you were looking at the charts, you wouldn't have exited, Mike, but at least you were there. You wouldn't have exited. It's a very powerful chart on breakout after breakout on certain days down. Just the way the Shopify will be a $2,000-$3,000 stock in maybe 6 months or 7 months, or maybe get bought out. Will you all have the patience or discipline to buy some long-dated calls and sit on it? I don't know. So what I'm trying to get at to all of you is stop fooling yourself, all right? So that's what this chart is telling you. This chart is telling you, going back to 2009, 2007, okay, 13 years, that it's a very bullish candle. But a chart that was drawn months and months ago, and I've shown this to you guys, just hit the upper end of the channel. So obviously, it's going to backtrack. And the backtrack is this. And that backtrack could be 2,000 points on the Dow. Right there. This is called real deal predictive analytics, okay? Not the garbage that you guys hear out there. All right? It hit exactly that. Look at that. Look at this. This is no joke. I was shocked myself. It hit it, and it happened a lot quicker than I thought it was going to happen. So it hit exactly that. So now, what if it pulls down here? That is 3450. That's 1,000 points down from where we are or more on the Dow. And God help us, and I'm just giving you the bearish view, that it goes completely red. In that case, 3,200, you can kiss the market down to 3,000. Can these things happen? Sure, they can happen. Now, what's the bullish scenario? The bullish scenario is it attempts to go back again and attack the 3675, 3700, and possible breakout. And those things will only happen if we have a stimulus bill, we have a somewhat peaceful transition, if there is a transition, okay, of power, and not some crazy stuff that goes on, then we can basically break out hard. Now, can somebody tell me, which is pretty easy to tell, why there's a good possibility that this market will make newer highs and head towards 3,800, hopefully by the early part of next year, if not by December? No, I don't think it's going to be December because January 20th is the switch. Why do you think that can happen? Or that the markets can go higher?
The vaccine news.
Yes.
Guys, I'm asking you technical stuff. Okay, I'm not asking you about vaccine and stuff. Please look at this because I work really hard to like teach you guys this stuff like every single webinar. So somebody's got to give me some right answer, please, and not Paul. Come on, guys.
The
Look at the
MACDs.
technical.
Yep,
Yeah,
MACDs,
go ahead. Go
great.
ahead, Ed. Shoot. Go ahead. What else?
It crossed over. It's heading up, diverging up, and looks pretty good.
The MACD is diverging up. Look at this. And we have an inverse head and shoulder. And if some of you don't even get this simple technical stuff, like I don't know. All right, come on. Thanks, Ed. And the stochastics are still saying we are not overbought because we only get overbought when we get up towards these levels. That's when you get these crashes. So that's telling us that it's possible we make an overshoot or maybe go up and retest the highs and then create a pullback because the internals are telling us that we want to go higher. Did you guys all get that? Please, yes, no, maybe?
Yes.
Okay.
And if you guys don't get it, please contact Ed, all right? He'll sit you down and smack you around the head and tell you to wake up, okay? Please. I mean, this is simple stuff. I expected some more answers. All right, doesn't matter. So enough of market charts. Let's look at stocks. So let's look at this baby here. This stock can go a lot higher. Okay, Williams-Sonoma. Give me one quick second, gentlemen, as you look at this. And let me just blow it out here. Ooh, this is nice. This is Williams-Sonoma, not the vineyard, the actual furniture company, you know, and houseware, high-end stuff. Take a look at it. Give me 30 seconds.
Any stocks you guys like to the short side? Hey, Paul, what did you think about NVIDIA with the earnings?
Oh, sorry, were you asking me, Paul?
Yes, I was asking you, what did you like about the earnings about NVIDIA?
Oh, I like how it held the trend line. I had a trend line drawn before the earnings, and it bounced right off the bottom of it and held it today. So it's got the upward trend line intact. And yeah, in fact, I like how big tech is looking overall. Like I'm seeing Amazon shrinking into a tightening triangle. It looks like there's a big move coming. It kind of looks like Tesla did before it broke out. And Tesla's been the leader of 2020. It's like the big name tech leader of 2020. So to me, it makes sense. Tesla broke out a few days ago, and the rest of the tech is going to follow it. That's the narrative I'm following.
Yeah, I kind of think the same thing with the S&P and everyone pouring money in. Tesla will definitely lead the way.
Well, tech is so strong, and financially they're strong, and I think this consolidation we've been having for a few months is really healthy. It's just, to me, it's just resting, and it's going to explode one of these days. And it's going to be probably in a matter of days or weeks, I think.
Yeah, especially with Apple resting like this. I think as soon as Apple, gets above that 120, 122, I think that'll, carry the market with it.
Yeah, and if we get some stimulus news, as we get closer to January, maybe they start getting serious about actually doing some stimulus. That could really spur the market on again.
Can you guys hear me?
Yes.
Yeah.
Hello?
We're here.
Hey,
Can you hear us, Frank?
Test, test.
Hi, Frank.
Yeah, I lost my microphone connection there for a minute. Hold on one second. Glad that you're in. Hold on. Okay, guys, can you hear me?
Yeah.
Okay, great. I had to put it
Just
on the
fine.
speakers. I don't know what happened. For about 45 seconds, I couldn't get the mic on. All right. So I'm just going to draw a couple of quick lines here. This company has a lot of potential, and you can call this a reopening trade too, you know, as the vaccine comes into play, and all that stuff. So you could be looking at this. It's already at 108. So this chart is not. One second. Sorry about the mic stuff. Hold on. I got my emergency headsets, but they were not right in front of me. All right. So at this point, the stock is already here. Okay. Told you guys to buy it around 100. It closed at 101. So it's nice. So I would draw this. And these lines have worked for me quite well. You could be looking at this stock at $140 stock. So if you're looking at a longer term play, you could be looking at something like this. Their margins are expanding. These guys are making money right, left, and center in the middle of this whole fiasco going on with lockdowns and stuff. So $140 stock. Okay, so that's one. Number two, let's take a look at TTD. It's just a beast. I mean, it's a beast with fangs. All right, I had this thing drawn out here. Options are expensive, mind you, but like I say, expensive options. You can just buy one. They move like a stock. You know, buy one at 20 bucks. Like, you know, Paul, you buy some expensive options for your long-term plays. You know, they can be 40, 50, 60. So this one, I'm looking at literally I'm not going to go that crazy at this point. Let me just do this. There. I am looking at 1,000 to 900 on this stock. Okay. TTD. This is a very powerful weekly bull flag. I'm showing you some longer term picture. Every internal is good to go. Now, short term, yes, it can be down 16 bucks, 20 bucks. Yeah, the NASDAQ down, it'll be down 10 bucks, but that has nothing to do with the longer term picture. This is very, very powerful on all fronts. Look at this. Yes, overbought, but we're talking about the longer term picture. So this stock is good for 900 to 1,032. Shop. This is what the most exciting story from Paul's homeland. All right, Shopify. Paul lives in a very weird place, another planet. It's called Canada. So my brother-in-law is Canadian. They're very weird people, very nice people. Just kidding. What's exciting about Shop? With all the great news, and they haven't even delivered numbers yet. Look at this chart. Where do you think it's going? I think it's going here. 1154. It's going to retest its previous high of 1147. Well, yeah, it's actually 1147. And I believe it's going to break out. This is a macro bull flag. I told you guys to buy it when it was below 900. Look what it did. On the weekly, it touched exactly the uptrending 34-day moving average. I'm going to ask the same question so all of you can learn how to manage your own trades. What it moved away very fast, very quick, away from the 50 and the 34-day moving average when it hit 1125 and when it hit 1146. All it did was a mean reversion. This is a very powerful structure. Can you guys hear me?
Yep.
Mhm.
Yeah, I just want to make sure that I'm still connected. You know, but for some reason, your voice is not coming through my headset. It's coming through my speakers. So, because this is important. So what is this structure here? Okay, I'm going to get the thing. Yeah, go ahead. What is it?
Well, it's in a defined range, it looks like.
Yeah, that it's definitely in a range, no question about it. The structure is a dragon bullish, and it's just about to cross the yellow line, which is the 5 week moving average. This stock has a lot of room to move. Of course, there's going to be intra-week volatility and all that stuff, but I'm just giving you some longer-term pictures on things. This stock is good for here. Okay, and especially after they signed with Alipay. That just opens them up to 50, 60, 100, 150 million new global customers they didn't have. Exactly. Canadians are always smart, man. I always said that. Us Americans are kind of dumb, you know. We're all about like waving little flags and screaming around. But Canadians do the right thing. I'll be honest with you. Sometimes. This stock is a monster. It is called Amazon Junior, which I mentioned to you. This is Amazon Junior. Okay. So yeah, very good looking chart. Next, let's take a look at Tesla. Now Paul's smiling. Paul's like, oh man, finally.
Oh yeah, my favorite.
Yeah, I know. Whoa, look at Tesla. Okay. Now I explained Tesla the last week, so I'll explain it again. The stock is good for 562. Look at that bullish candle. This is sick. Paul's like, Frank, I love you. That's exactly what he's saying right now on his head. Okay.
All-time high today.
All-time high today. Exactly.
That's bullish. Yep, that's very bullish, right?
And this was a chart that was drawn on last week's webinar, if you remember. It's very bullish. No question about it. 1 second. And Elon Musk is in bed with the Chinese. And China is the fastest growing EV electrical vehicle market in the world. And I will admit, like an idiot, I missed some of these huge Chinese EV trades in the past couple of weeks, like XPEV, which I told you guys to look at. Paul, I mentioned that to you if you remember way back. Look at Solo. Look at Candy, KNDI, up 24% today. Solo, I can't even say the name, Electromechanica, that's an American company. Even Neo, that we made money on one day, and the small and the rest of the balance that I had left, thank God it wasn't that much, lost money on because it turned around, went monster, and somebody from Goldman or Morgan Stanley just went berserk on it, saying it's going to be a $60 stock. LI, another Chinese stock. Li Auto Incorporated, ADR, American Deposit Receipt. That's a foreign company, you know, listing in America. Up 3%. Nikola, a great American company, up. So I don't want to mess with this. I believe the stock is good for 565 before it hits a roadblock. Maybe not, maybe not, maybe not. Maybe I'll move this up a little bit. 600. Can it happen? Yeah, it sure can. Let's take a look at Facebook, another one of Paul's favorite. Not too excited about it, to be honest with you. Facebook is in a defined trading range. Lots of good stuff. Of course, you can trade it on certain days. Let me just fix it right there. Sure, it can go to 300, but I'd rather be by Facebook maybe a little bit lower. It's great. Let's take a look at Snap. See you later. Like, really, see you later, okay? This is a very massive bull flag. Every week it's doing this. This stock is good for at least $50. You guys would be loving me. Well, who cares about loving me, okay? You'd be loving yourself if you bought some, you know, if you the stock gets to 50. I think it does. Fibonacci extensions tell me 70. Now, these are really bullish expectations on these companies, but these companies are really making a crap load of money. Pins. Oof. It's like they take your breath away. Look at this. So when people tell me, oh, I just want to do swing trades, I don't want to deal with the intraday volatility stuff, I say, sure. Then these are the companies you want to buy. Stop making excuses. Pins' growth has just started. Pinterest. This is a megaphone pattern. Look. Wow. $75, $10 more. That's a lot of money in your pocket. Let's take a look at Square, one of my all-time favorites. See you later. All right? 257. Like they say in New York, kiss my whatever. All right? Yes, it's going to pull back here and there. Does not matter. The longer term picture is saying 250 based on this very powerful technical formation as well as the fundamentals of the company. This is a serious weekly bull flag, like really serious. Oops, breaking news. Want to read this? I'll read it to you guys. Mnuchin decision cuts Fed's lending power, but sources say emergency programs can be revived. That's the kind of news that we want. That's why futures just jump from being down 27 to only down 20. Get it? One day you guys will learn. All right? Read the English. The sources say emergency programs can be revived. Exactly. Because Mnuchin ain't stupid. Unlike many other people in the Trump administration and Biden administration. Mnuchin, genius. All right? There you go. Bang. Next. Blink. Supercharger, supercharger, supercharger. I told you guys like so many times that I almost lost my head. Whoa. What's going on here? Exactly. So it does not matter, Mike, if you missed, if you sold too early. It's not where you're coming from, it's where you're going. This company's real growth spurt is just starting. I've said that a zillion times. EV vehicle production sales are going nuts. If Tesla's going to go to $1,000, why shouldn't Blink go to 50? Everybody needs a supercharger. So where's the stock going? $27? Yeah, I think so. Will it vacillate a little bit around here? Absolutely. But look at the size of this. Look at this volume. Who do you think bought this volume? Us or institutions and hedge funds and large money managers? Can somebody tell me? Somebody tell me. Come on, man. We're not in silent mode here.
The latter.
Exactly. Exactly. You don't need a genius to figure out. And once it gets into this expansion channel, acceleration channel, that it had started all the way back on June 29th of this year, it's going to go straight to 28. GameStop, just starting its journey. Look at this. Here's your acceleration channel. These are the longer term swing pictures. So I don't keep on hearing from some people like, oh, what can I buy? I don't want to like, you know, where I can sit on. Well, sit on these, baby. Okay, sit on them with a nice cushion under your butt. And buy them when they pull back on certain days. Upper level, 18. Best case scenario over the short term, 20. Want to look what this stock looked like? It looked like here. It was $57. It's just starting. And it's just about to break the 50-month moving average. 50-month moving average. And once it breaks that, boom, calls are cheap. Buy a bunch and just leave it there. Do whatever you want. Look at the volume. Real long-term traders, activist investors, they are the ones buying. When was the last time you saw volume like this? Can somebody tell me when was the last time we saw volume like this? Going back to 2011. 2011, wow. When was the last time we saw volume like this since 2011? Mr. Mr. Dark Horse. Excuse me, 1 second, Heisen, not you. Dark Horse. When was the last time we saw volume like this? 400 million shares, 253 million shares. When was the last time we saw it? Dark Horse, answer please.
I'm not quite sure actually.
You're not quite sure. Are you looking at this screen or are you looking at something else? How can you be not sure? I'm just expanding the volume column for you. When was the last time you saw volume like this?
I can't see the date on that bar there, but I know what you're talking about.
I'm just asking a question. Don't give me riddle answers, okay? When was the last time you saw volume like this in this stock since 2011?
Well, just right now.
I'm sorry, what?
Just now. It's been spiking.
Exactly, right now. That's because the company is going to a multi-billion-dollar financial engineering restructuring. Exactly. So I'm not quite sure is not an answer. Nuts.
They also
No,
have
seriously, come on, get focused, man. Seriously. We have never seen volume like that. The stock has a long way to go. Let's take a look at Sonos. I mean, it's mind-boggling. The monthly says all-time high was 23.6. We've got a little bit more room to move. Can it break out over that? Maybe, maybe not. This is a hardware company, but it's starting a subscription business. So obviously, the street's very excited about it. We originally bought it, I remember last year, around here. We made some money. Then we got hit. I told you guys to buy here, and boom. Any other stock you guys want to see? Because, oh, DraftKings, my favorite. Forget the monthly. Let's look at the weekly. It just broke out. The stock is good for $55 and then eventually more with some big shot analyst. I mean, he's a real baller. Putting $100 price price target. Like, wow. Not that I really care about analysts. I know Dark Horse probably does because he works in the financial industry, but this is serious stuff. Just this pattern alone will make you very happy. And this pattern will make you very happy. So next time I hear somebody saying, oh, I want to buy something, I don't want to look at it, blah, blah, blah. I say, please review this webinar, slap yourself on the head about 5 times and do whatever you need to do. DraftKings, falling wedge breakout. Walked you guys all through it. We bought here, we went up a little bit, then we bought here, it went up a little bit, fell. I got a lot of DMs like, with sad faces, like, oh my God, what's going to happen? And bang. All right, any other guys you want to start look at? Because it's it's 10:25. I need a break.
Frank,
Okay.
Make it quick.
Appian, APPN. The stock is a freak. I can't figure it out.
I'm sorry. What is it? What's the symbol?
APPN.
APC as in Charlie?
APPN. N is in.
Just spell out the thing. It's coming through my speakers, and I can't.
APPN. N is in no.
Appian. Wow.
Yeah.
Holy cow. I know I've heard the name. Gotta look into this. Let me write this down. I'm telling you, there's some beasts like this, out there. What is it, a software company?
Yeah, it is. Yeah.
I know in my readings I've come across it. Wow. It's like.
Yeah, it popped up. I was screening on FinViz and it popped up overbought. And I found it had bearish divergences on multiple time frames, and the thing keeps going up. I can't figure it out. I don't know what the company makes or does. It just keeps going up.
No,
It's insane.
they're in software that I know. Who is this, by the way? Who's asking the question?
Oh, it's me. It's Chris.
Who is it?
Chris.
Oh, Chris. Yeah. Wow. I got to look into this. I mean, this is like a see you later story, you know? There's a couple of stocks like this, believe me. There's a lot of stocks. Okay, I wrote it down. I'm going to definitely look into it. I don't know what to say. I mean, this is just mind-boggling. I mean, if you look at it's beyond. I mean, the ultimate Fibonacci extension is 180 bucks. That's on a longer-term view. I'll definitely look into it. I can't really comment on it because I don't even know anything about the company. The other one like this is, which I told, I've mentioned it to you guys. I mentioned it during one of my earnings trades. The stock went down, and then the next day, boom, went nuts. I'm like, yes, this is a new IPO. It came public September of this year. It's called Unity Software, and just take a look at it. All right. So the earnings came out, and then the stock went down to 100 bucks. See you later. Went back to 125. This is another one you got to keep on your radar. Okay, Unity Software, because first earnings were fantastic. Imagine what the next one's going to be. If they beat 3 earnings quarters in a row, the stock is looking at 200 plus. So some pretty serious stuff. Listen, guys, there's a lot of stuff going on here. This is another one that I mentioned to you guys. I'm already up on it. Cody is Ulta Junior. I'm sure some of you guys love wearing lipstick and makeup, mascara, sometimes during the day, right? Just kidding. So I don't know what you guys do in private, but gals, you know Cody. You know it's like Ulta Beauty. The Kardashians are in it. It's a good-looking chart. Fund manager put a $10 price target on it. Heavy call buying. I'm looking at around 836. It's going to be a nice money. Call spot around 90 cents. They're already at $1.10, so it looks pretty fantastic. So so that's basically it. All right, guys, I got to wrap up. Any other quick question?
Hey, Frank, can I just mention one quick thing about tech?
Go ahead. I'm listening.
I keep a close eye on big tech, and I think Amazon is signaling a big breakout in big tech coming up. It's on the daily chart. It's like, you know, it's really a tightening triangle that's forming, and it's running out of room. And there's going to be a big breakout, in my opinion, very soon. And we got Black Friday and Christmas season coming up, of course. So I would keep an eye on Amazon to signal a breakout in tech overall. It's been consolidating for months now, and it's storing a lot of energy for this future breakout, in my opinion.
Hello?
Hey, Frank, we lost your audio there, but I think we got it back now.
I know. There's something going wrong with this, the headset, or it's a GoToMeeting thing, not sure. So what I was talking about, like, this is the consolidation flag between that you were talking about, right?
Yeah, I guess I was going a little bit shorter time frame, and just it's
Yeah,
Kinda
well,
looks like
I'm looking at the daily because it gives me a better picture. I can't imagine that Amazon is not still above its 50-day moving average. Is that crazy? This stock is definitely a buy. I mean, this is nuts. Look at that. It's still below the 50-day moving average. So one way or the other, if somebody wants to play it short term, the 50-day moving average is always a magnet. Okay? And that's 31.58. We're at 31.17. You got 40 points under your belt. I say buy it. I mean, it's not even over its 50-day moving average. I got to start focusing, on Amazon. That's kind of crazy. And if Amazon breaks out over the 50-day moving average, it's going to take out 31.97, call it 3,200 within a matter of hours. And then the upper end of this consolidation channel is 33.46. With the holidays coming up, with Paul's talking about this and that, God help us. Excellent that you brought this up. Now woke me up. Look at this. You got 40 points under the belt. Let's go for it. On that note, futures are down 21. Nothing big, but let's keep an eye on things. I explained the risk factor in the market, which I certainly always focus on. Explain the VIX, all the other good stuff. And I love you all. Now get to work, do your job, because I'm certainly doing mine. All right? God bless you all. Let's make money. Good night.
Good night, Frank.
All right, good.